Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your end of the day financial market update, and this is for Tuesday, and this is the 28th of February 2017, the last trading day of the month, and we're about 3:17 p.m. Central Standard Time as we've got that pause period in stock indices. Now, I know the Dow closed actually around 20,807. It'll trade another half hour, but that'll be where the settlement price comes in. Look at how they've hammered on the gold market going into the end date. Now it's going to settle higher. Remember, a lot of markets settle at one time and finish trading at another. It has to do with how they do the bookkeeping and hedging and blah, blah, blah all through the market. But that gold is going to be down about $4 from where it was before. What's picked up going right into the close is the dollar index, and you know what's going on. Jockeying for position in front of President Trump's speech at 8 p.m. Central Time, 9 p.m. Eastern Time tonight. Now, what we have to hope for is that the president gives us a lot more detail. I don't want to hear how he won the election. I don't want to hear that he's going to spend more and make America great. How is he going to get it all done is what I think people want to finally hear. The grain markets were totally wild because there was a rumor that the president was going to sign an executive order changing the mandate on the biodiesel blends and so on. It would have benefited, apparently early in the morning. Carl Icahn, the White House, has come out and said it's not even on the table. I don't know what that means, but the markets almost went limit in some of the grains because of it and then backed off. Quite crazy. So as we take a look at a weekly chart on the Dow, you know you're in a record high in the market right now on the high at 20,834. Today's pullback, slight one on a settlement basis, not very impressive, is it? I mean, this market just acts like it wants to move up again because the president's liable to say tax packages, spending, infrastructure. The key is we need some detail, and I'm not sure that he's going to be able to offer that. I think it's going to be more of a rah-rah speech. I hope it isn't, but that's what I fear it is. As we keep coming up, you can see on a daily bar chart how we look with nothing on it. But the moment I add the swing lines, the first thing that becomes evident is you got the pattern of higher lows, certainly the higher highs. That's bullish unless you take out 20,695, the current break low. When you put on the 18-day and the 100-day moving averages of closes, power to the upside again, both numbers over these all-important areas. If you were to break through 20,695 before you find real good support at the 18-day average, you got about a 200-point gap. In looking at where Bollinger Bands are, on the next thrust, if it's powerful, you might get up to this 2100 level, 21,093, where the next resistance, the upper Bollinger Band, sits and waits for the market. And in terms of market momentum, this is as powerful as you get. This is the embedded slow stochastic reading, and until it's lost, this market on pullbacks continues to be saying that if momentum's leading price, that you're going higher, and those are the opportunities in the market. That's the concept of what that does. On the March mini S&P Dow, still an embedded reading, higher lows, higher highs. So far, no chinks in the armor. You can get them tomorrow. There could be disappointment, or there could be a hooray off of whatever President Trump offers. I don't know. I don't think anybody knows. We're going to find out. When we come to the March NASDAQ, you were down 15 points, and as you can see, you still have the pattern of a higher high now, a higher lows rather. If we come here for a high, that's 53.61 and that was back on Thursday. Now the pattern has dropped back where you've got lower highs, higher lows. It's the first chink in this armor, but that gets removed if you take out today's highs tomorrow. Got that? That's all. Not today's highs, the day before's highs. That 53.52. I said that wrong. That would then give you the higher lows, new higher high. Away you go. You could be on the road to 54.15. Take out 52.99. You might be headed back to 52.65. The 18-day average of closes, and in the process, you might lose your embedded reading. So I think you're at a very, very important part of this market. If you look at the Russell, this is the market that it threw out, and I want to just show you here, its first weakness sign right here on Friday. Then the market rescued itself and went back to an embedded reading yesterday, and today it just fell apart. And that's why you'll often hear me say, when you start to lose that embedded reading, and even though it gains it back, it is a market that if it lets you out in a full piece, and I teach this, often go for that road. And it's what I had done for my clients in the market. Yes, I'm sorry they couldn't get out higher, but they certainly feel a hell of a lot better with this market down as much as it is from where they got out. So that's how you look. What is the trend in this? Well, if you close under the 18-day average, let me scare you and say down. Clear out sale, lower highs, lower lows. This index is flashing that this speech for the small caps is not going to go well. I can't tell you that that's going to be the outcome, but it's certainly flashing that sign right now. And the VIX up and over the upper Bollinger Band. Remember what I said, maybe you're going to eventually challenge this 100-day average. Guess what's happening? You're on the road to it. You haven't done it. That number's 1312 and you're at 1292. You are overbought as can be as well. So do we set this market up? And by the way, if this turns out to be a base, the stock market's in trouble because it's a hell of a base and it could really kick the market up. So got to be a bit concerned on that. In the 30-year June bond, remember I've left the March now to the June. My eye goes immediately to an overbought market. Yes, it's in an uptrend. It's hit an upside target. It's got more resistance up here. I think the market's going into the report bullish, but neutral in its own way because of being overbought. In other words, I think the pros aren't there in the way you think. You took the 10-year note all the way back to the 18-day average after hitting the upper Bollinger Band. For those of you that buy my charting course, duh, what do we talk about? That opportunity. You take it from there, folks. You know what I'm talking about. If you didn't take the course, you should go on the internet and take a good look under the word education on our website at www.iraepstein.com. March dollar index back into its uptrend, higher lows, higher highs. But do you dare do anything with this in front of the report? If we take a look at this high, we know it's 101.71.5. This high's 101.75. So anyway I'm going to cut it, I have the higher lows, but I got lower highs. I don't like that. I'm overbought because I got a 71 reading. I don't like that either. I don't know what to do with some of these markets. That's the simplest way to be honest. In the euro currency, you had your rally attempt to get back to the 18-day average today. You got right up into that zone. The high was 106.35.5. The 18-day average, 106.43. Is this where the market's going to fail and resume down, or is this the stall period? So far to me, it's a stall period. Oversold market, turned the swing line up, still under the 18-day average, nothing there. The British pound went right back down to the lower Bollinger Band. It has been what I told you. This action, this formation of the black dash lines, dangerous. Hard to do anything. You get down to these numbers, you're oversold. Often you get no follow through. You're back under the 100-day average, so support between the Bollinger Band and resistance back at the 100-day. A son of a gun market to try to figure out what to do anything with. Now, there was early in the day a lot of buying in the yen that carried it up at one point to 89.56.5. It almost fell 100 points from there, going right into the close. One of the things you have to be careful of in markets is you get into major reports, and the president's speech tonight in front of the joint session is a major report. We don't know what he's going to say. It's his first real speech in front of this. Who knows where this is going? Nobody knows. Crude oil, a rescue day. You had the lower highs, lower lows, got down pretty far and came right back to that 18-day average. The market is staying in a neighborhood. It's not overbought. Momentum is sort of flat, and that's what you're doing. You're not getting follow through to the up or down side. It's one of the lightest, least volatile Februaries I've ever seen in trading energies. The volatility is just out of the market right here. You tried the breakout and the rebound. You pulled right back into the lower Bollinger Band above it. So I feel good about that. Now, nat gas is going to have a good close, but it's going to wait for the weather. And if the weather doesn't help this market, well, it comes right back down. Right here, this is where the market should have stopped. Now we'll see if it gets legs or if it gets annihilated again if the warm weather continues. So let's talk about something. We're going into March 1st. When you look at March, you should be looking at the Moore Research Center. There's a lot of trades, seasonally based trades, that they want to make available to you on a 2-week trial. Now understand how you work with this. They have a database that looks in different months, be it the March trades, the Feb trades that have just ended. They're going to look at all that and they're going to say, okay, based on X amount of years, if you bought on this date and got out at this date, X amount of the days you were in the trade were profitable. Here's the amount that it wasn't profitable. Did the trade work or not? Now you might think that's good enough to just trade on. They're going to warn you, as I am. No, that isn't. You always look to see what are the fundamentals. If something changed, are you in an election year, something different? But a lot of the fundamentals don't change off that because, let's face it, you plant corn at a certain time of the year. You always wonder in parts of the spring, too dry, too wet, then the crop gets made later, blah, blah, blah. So you look for those seasonals and you match them up with what? Other market technical tools or the fundamentals that you want. Anyone that I know that looks at these seems to, I fall in the idea, here is another nice tool for my arsenal, be it you're looking at consensus for the bullish bearish consensus. You're looking at this for ideas as to what seasonally has happened in the past. But the past can't guarantee the future, and that's why they put all these disclaimers on it. But it's still a heck of a tool. So how do you get it? You get a 2-week trial by calling us. You can go to our website. You'll see our carousel of free offers. You can come up here. You'll click on right now, if you're watching me on YouTube, this icon, just click on it. You'll see the form for it, or below us on many websites. I'm Ira Epstein, trying to offer you a lot of different trading tools. Take advantage of them. At least look at them. That's all that I ask. I'm Ira. You have a good day.